Hey everybody, hey traders, Chris Pulver here. It is 7:42 Eastern Time, 5:42 Mountain Time. I just got back. I'm just doing a little spot check and a video update for the Flex Trading Room and Equities on Demand. Things look pretty quiet today per my dynamic trends. Equities wise, we're up a little bit with lows on the SPY around 529. We closed near the highs around 531. I'm looking at the bigger levels going into the rest of the week. Wednesday, middle of the week, NVIDIA earnings coming out afterwards. Risk on, risk off will be pretty apparent going into Thursday's trading. So if you're looking at the equities market, I think 535 is a legitimate target, which is another $3.70 to the upside. And let's take a look and see where everything kind of finished for the day. So currency wise, things remain pretty choppy. Right around 9 o'clock, we had some news. I'm guessing that this is the CPI data for the Canadian dollar. Here we are, Tuesday, CAD CPI. Let me refresh this and see what the numbers did. CAD CPI median came in slightly softer than expected, 2.7 to 2.6. There was an upward revision, 2.8 to 2.9. And that would be your year-over-year median CPI. Trim CPI came in as expected with a higher revision from 3.1 to 3.2. And the month-over-month as expected at 0.5. So if the market is anticipating slightly softer inflation numbers, means a little bit more of a dovish tilt towards the central banks. This is probably a reaction due to, hey, the Bank of Canada might be cutting rates in June. We've talked about that in the trading rooms. We've talked about that, thinking that, the Fed is possibly going to cut rates in September, but other central banks, including the ECB, the BOE, the BOC, might be starting to pivot and cutting rates as early as June or July. So obviously, we'll see how that plays out, but the only reaction I really see today is a slightly weaker New Zealand dollar and a CPI reaction on the CAD. But for the most part, vertical axis wise, things are pretty contained on the day. SPY, again, small candle. We're still kind of trading inside of this push up on Wednesday last week, Thursday indecision, Friday indecision. We are sitting right up near those highs once again. 535 and the drift to the upside could continue. Like I said, NVIDIA earnings tomorrow. A couple things I'm noticing just on the technical side, as we had mentioned last week, and also going into Monday's session, this high in price on a weekly time frame showing divergence. Therefore, if we do kind of blow the top off, I could see this market starting to fade that move back down to at least find past resistance, becoming support for maybe a bit of a dip before we continue higher. Or the market uses this week's news to start to fulfill some gaps earlier. So this is the gap from last week. That would have been a push higher. The Apple gap from that would be the 2nd of May, the 2nd to 3rd of May. That was I believe, Wednesday to Thursday or Thursday to Friday when we had that big gap up. Nevertheless, a couple of gaps to be mindful of. The weekly time frame showing overbought conditions with divergence. I'm not saying that we can't go higher, but I would say any aggressive gap up, because NVIDIA is $2.37 trillion, has the ability to gap this market by probably 1% to 2%. That's enough of a move where, let's say we go up, I'll just say, 2%. If we go up 2%, that is a push up towards 542. If we have a big gap like we did down here, there could be a little bit of momentum behind that move. But man, I would be just salivating at some overbought conditions and waiting to see if I can just time a dip. Not that I want to be bearish, but rather wait for a correction to then buy again. That's probably a more prudent play than just trying to guess, hey, I'm going to short the market now. In the equities world, when it's, when the sentiment is up and we're not really pushing extremes and extreme greed, I think that the path of least resistance remain bullish right now. At the same time, we're looking at the dollar index. Dollar index is still responding to the trendline support that we've been discussing. I still haven't made a clear decision on whether I want to be bearish on the dollar or bullish. Neither have confirmed yet, so I'm just waiting still. U.S. oil, a lot of chop in here. We could box this in. I'm going to go ahead and do this for the sessions later in the week. If I just box this in, we have some structure right in there that I'd be mindful of. Just be aware of some bear traps. I could see the bears coming down here and then closing back on the yellow. If that was the case, and I saw that, especially on the right-hand side of the trend line, I would probably take a long position on oil with stops below. You could trade oil futures. You could trade USO. You could trade that a couple of different ways. You could trade, commodity-based pairs in FOREX. But I would look to see if oil still has a push higher after a bit of a correction, especially on the right-hand side of the trend line. So we'll see if that level holds. Check out gold and silver. Gold is up to some fresh highs. We did poke those levels yesterday for the daily candle. I'm a little skeptical of, hey, this thing's just going to rip higher. It certainly can, but I would almost like to see this. A little broadening pattern would be pretty nice to get an opportunity to buy a dip back around like 2270 or 2300. I would still be willing to buy some more gold and hold that longer term. But let's see if after a push like this, we have a little bit of sideways motion. Let's see if we get a bull flag out of that. If we can get an equal low to buy from, I like that long position. And then see if we can just, buy low enough, even have it in a range trade, and then longer term breakout would be pretty solid as well. I do still like gold, medium term, long term bullish. I like silver as well. And silver, the last couple of days, finally showing some indecision. I would love to see a pullback. I did take some profit on a silver position. I was 10 contracts long from $20 to $30. You can see that this is XAG, but my SLV position was pushing and almost knocking on the door at $30. So we are trading at 29.27 with a post at 29.29. My sell position was at $30. I took a $4 position and turned it into $8.55. That was more than 100% gain on that position. So I went ahead and took the profit. I'm looking to redeploy that capital. And so I'm in some 29, 28, 27 puts right now and looking to see if I can get filled on some assignment for SLV. So we'll talk more about that tomorrow in Equities on Demand. We do have some earnings to keep an eye out for. I know that we participated in mostly Wednesday, Thursday earnings. So Toll Brothers is aftermarket. We'll take a look at that one tomorrow in class. Target, I didn't like ELF enough to take a trade on it. Snowflake and NVIDIA. And that was it for this week. So 1, 2, 3, 4 earnings plays in Equities on Demand. So we'll be watching those and see if we can manage them out to Friday the 24th or the 31st. But silver is still looking pretty good. Bitcoin has made a nice run the last maybe 3, 4, 5 days. We're pushing up near all-time highs once again. This is going to be a really critical level. I mean, look, I fully understand that we could hit the highs again, test those highs and fail and have some range trading on Bitcoin. I could also see that, look, the NASDAQ's at all-time highs. Bitcoin's playing a bit of a catch-up trade. And if we can break these highs, there could be some more speculation, more momentum, and the spot price continues to rally. And all of a sudden we cross 80 to 85, 85 to 90. All of a sudden we're closing in on the 100K mark. If you like the profits heading into 100K, it might be worth taking profit prior to the 100K. I'm just thinking back from personal experience. The last time I was like, oh, it's a sure thing. That was when I thought the dollar yen was going to go to 100. Well, it got really close, but then it had like a 400, 500, 600 pip pullback. And that might be the equivalent of maybe a 10, 15, 20% pullback in Bitcoin if everyone's, salivating over 100K spot price. So, I've got a cost basis here around, $30,000 or less. I've been in, Bitcoin longer term since like 2016. So if we get to 100 grand, I just might look at the P&L. If I'm up 3, 4, 5% for my entire portfolio, just having some exposure in Bitcoin, it might be worth protecting. It might be worth trading some of the other ETFs and just staying long on a couple of things, keeping some skin in the game. But maybe some of my, my Coinbase plays, my Bitcoin holdings, my off-grid stuff, we'll find out. So anyway, I'll talk about that more. But let's see first and foremost if we can break the highs at 74 and continue to push higher. I'm just thinking if we close in on 100K, it's going to be, what do I look for? Overbought conditions with diversions. If it prints on the daily, prints on the weekly, just like we saw back here, I was not surprised that Bitcoin had corrections there, or even there as we put in some bottoms, simply because it doesn't happen very often in the higher time frames. But when it does, I start to pay attention, which is also why I'm slightly cautious moving into higher highs in the stock market right now based on the weekly time frames. So any type of move to the upside, I do think a correction is probably more imminent, more near term than a continuation and sustained rally higher. But we could also just push all the way into May, and then we have a correction coming in June. There's obviously seasonality to these markets. And again, path of least resistance in the equities markets at least remains elevated. If I go to the IWM, I haven't checked this in a while, but the Russell still cannot break these choppy highs. S&P's at all-time highs, NASDAQ at all-time highs, Dow at all-time highs. The Russell is the small cap catch-up trade. Can we get this thing to break above 210, 211? Can we get this thing to get up to 240, 245 and make a run to the upside and retest all-time highs? I'd love to be a part of that trade. The way we're trading this in Equities on Demand is through options. We have a diagonal spread where we are long the IWM, targeting a rally towards January of next year. And if we are correct and we have that upside potential, I'm trying to basically buy a position here through options and look to see if I can sell against that to lower my cost basis and see if we can revisit all-time highs. So if we get a breakout above, 210 or 211, I would like to possibly put in some credit spreads, maybe a naked put on the IWM, be willing to take some shares. I could also look at a ratio spread in the IWM. We'll probably talk about that more tomorrow because we did that on the SPY, on the Qs, on the DIA over the next 30 to 60 days. So a lot of equities discussion. NVIDIA is the big one this week. Still watching the dollar index very closely for the Forex side of things to see if we have any good confirmation. I'm out of the JPY crosses right now. I'm long against the Swiss. I'm a broken record right now for my Forex trading. I'm just staying the course. I'm staying patient. I'm letting those pips roll in on the Swiss side. I'm adding to those positions. And so far, so good. So I don't really see a need to deviate. I don't see a need to take profit right now. When it comes to the equities market, I'm a little bit more active in the portfolio and want to make sure that I'm taking trades off, redeploying that capital more efficiently, and seeing if I can put it to better use as opposed to just sitting and waiting for things to go full expiration. So that's where I'm at for this week right now. Sorry we didn't have live sessions today, but it was a fun day to kind of get out of the office and be at a golf course. It was just one of the things I have to do for the PGA of America to maintain my card and membership. So I appreciate everyone's flexibility per usual. I'll be back tomorrow with the trading rooms, see if I tag team anything with A1 Trading, but we'll keep you posted. I'll let you know in Discord, and we'll keep plugging away. All right, happy trading, lots of profits, and I'll see you all tomorrow. All right, thanks everybody. Bye.